Welcome to today's Explainer. Today, we're unpacking one of the most fascinating, exciting, and frankly, terrifying economic phenomena out there, the financial bubble. But look, instead of getting bogged down in Wall Street jargon and a bunch of complicated charts, we're going to use a really fun, incredibly clear lens to understand these complex market manias. We are heading straight into the jungle, and we're going to talk about monkeys, leaves, and bananas.
Okay, let's dive into this. Here is the absolute central mystery we're going to solve today. Why on earth would a completely rational monkey living in a jungle literally full of fruit suddenly hand over 100 perfectly good leaves for a single banana? I mean, it defies all logic, right? But as you'll see, perceived scarcity in irrational markets can make anyone do some pretty crazy things.
Section 1. The Banana Bubble Boom.
To really understand this madness, we have to watch how a simple, everyday snack suddenly transforms. So imagine a totally normal day in the jungle. A monkey buys a banana, and it costs just one single leaf. The monkey eats the banana, life is good, everything is normal. But then, a rumor starts to spread. The banana stores announce that, hey, bananas are actually getting a little harder to find. Suddenly, that banana isn't just a quick snack anymore. It's rare. And because it's rare, it's becoming valuable.
And this is where it gets interesting, because it brilliantly illustrates how quickly human, or well, in this case, monkey psychology shifts. The monkeys get an idea, if bananas are going to cost more tomorrow, they should probably buy more bananas today. So they start buying them up, but not to eat them. They're buying them to sell to other monkeys later for a profit. By the next day, the price jumps to 2 leaves, then it hits 5 leaves. The trading gets super fast and frantic, and before you know it, the price skyrockets to 10 leaves. Monkeys are literally hoarding bananas purely to flip them.
You can just hear the sheer emotion behind this. I should have bought bananas. Why didn't I buy bananas? This is the incredibly powerful psychology of FOMO. The fear of missing out. Monkeys who didn't buy in early are looking around, they're seeing their friends getting rich in leaves, and they just panic. They absolutely do not want to be left behind. Herd behavior completely takes over. Even when it doesn't make logical sense, monkey see, monkey do entirely replaces rational thought. This absolute mania pushes the price up to an astonishing 50 leaves. I mean, really think about that. It's a 50-fold increase. The entire jungle economy goes completely bananas. Suddenly you have monkey YouTubers making banana commentary videos, you've got monkey news networks giving out banana stock tips. Literally everyone is a banana investor now. The hype is so loud that absolutely nobody wants coconuts anymore. It is an all-yellow market.
So how does the price just keep going up and up? Well, it's driven by what we call the upward hype loop. It's a self-feeding engine. Monkeys buy bananas, which reduces the supply, and that makes the price go up. Because the price goes up, other monkeys look at that and see a sure-thing investment. So even more monkeys buy bananas, which, you guessed it, makes the price go up even further. The universal belief across the entire jungle is that prices only ever go up, which practically guarantees this continuous frenzied loop.
Section 2. Leverage, the air pump.
Now, the frenzy alone isn't quite enough to create a world-ending bubble. We need a dangerous financial mechanism added to the mix, and that is leverage. Leverage is when a monkey uses borrowed leaves from a bank to make much bigger investments than they could ever afford on their own. It multiplies potential gains, sure, but critically, it also multiplies potential losses. If the banana hype is the bubble itself, cheap loans from the monkey bank are basically like King Kong standing there with an air pump, blowing the bubble up to a truly terrifying size.
Let's compare two different monkeys directly to make these risks crystal clear. First, an unleveraged monkey. They buy 100 leaves worth of bananas using their own hard-earned savings. If the price goes up 10%, they make a nice, safe 10 leaves. If it drops 10%, they lose 10 leaves. It's totally manageable. But the leveraged monkey? They buy 100 leaves worth of bananas too, but they only use 10 of their own leaves, and they borrow 90 from the bank. If the price goes up 10%, they make 10 leaves. That's a massive 100% profit on their initial 10-leaf investment. They feel like absolute geniuses. But if that banana price drops just 10%, their bananas are only worth 90 leaves, and they still owe the bank 90 leaves. Their own money is entirely gone. It's a total wipeout, leaving them with 0 leaves and a mountain of crushing debt.
So, the absolutely crucial point here is that this massive influx of borrowed bank leaves supercharges the upward loop. Leveraged monkeys are borrowing constantly, bidding against each other, and pushing the price to an utterly absurd 100 leaves per banana. This right here fulfills the true textbook definition of a financial bubble. It's when the price of something completely and entirely detaches from what that thing is actually worth.
Section 3. The inevitable crash.
Because, eventually monkeys get hungry, and you cannot eat a hoarded investment. This is the exact psychological turning point. Monkeys look at their massive piles of aging, brown fruit and suddenly remember, wait a minute, bananas literally grow on trees. They're everywhere. They're meant to be eaten, not locked up in a bank vault. A banana is just a banana. And just like that, the illusion shatters in an instant. The herd mentality violently flips from greed to sheer panic, and a massive sell-off begins.
Let's move to the next phase and see how this builds into an absolute catastrophe known as the downward crash loop. When the monkeys panic and start selling, the banana price drops just a little bit. But remember our leveraged monkeys? That small drop totally wipes out their initial leaves. The monkey banks panic and demand their 90 borrowed leaves back immediately. This is what we call a margin call. To pay the bank back, these monkeys are forced to sell their bananas at literally whatever price they can get. This flood of forced selling makes the price drop even further, triggering more margin calls, forcing more selling, and causing the price to absolutely plummet.
The aftermath is incredibly tragic. The price drops from 100 leaves down to 50, to 20, to 10, all the way down to half a single leaf. Life savings are entirely wiped out in a matter of days. The jungle is just filled with desperate monkeys begging anyone, literally anyone, to buy their worthless bananas just so they can pay back the monkey bank. I can't believe I fell for it again, they say.
Section 4. The 4 stages.
All right, let's step back from the jungle fable for just a moment, because every financial bubble in history generally follows this exact classic timeline that we just mapped out with our monkey story. Stage 1 is discovery. A new thing comes out, monkeys get excited. Stage 2 is the boom. Lots of monkeys start buying, driving up the price. Stage 3 is mania. This is the point of peak delusion, right? Every monkey thinks this new thing will effortlessly make them rich forever, and they use massive leverage to get in. And finally, stage 4, panic. Gravity takes over, monkeys are violently yanked back to reality. So let's categorize who actually walks away from this intact. The winners are the monkeys who bought early and actually sold early, well before the pop. Or the savvy monkeys who actively bet on the crash itself. And really importantly, the monkeys who simply took a nap and didn't buy into the frenzy at all. They still have all their original leaves. And the losers? Well, that's anyone who bought in late at the very top of the market. And tragically, the monkeys who borrowed heavily from the bank and are now stuck holding worthless fruit and massive debt. So how do you protect your own hard-earned leaves? You've got to watch out for these crucial red flags. If you see average monkeys with absolutely no expertise suddenly making massive amounts of easy leaves, that's a warning. If you see huge amounts of bank borrowing fueling an investment, that's a warning. If the entire market is simply going bananas, dominated by this delusional prices only go up mentality, step back, take a breath. You are very likely in a bubble.
Section 5. Bubble or breakthrough.
Let's pivot for a second and apply this ancient jungle fable to some modern, real-world phenomena. Because look, not every new, hyped-up thing is a bubble waiting to pop. Some things are true breakthroughs with real utility. Imagine the monkeys discovering electricity to keep them warm and provide light that fundamentally improves their lives. But contrast that against a speculative bubble. Imagine something like the hyped-up smart AI monkey making the rounds in the jungle. Everyone claims his AI monkey is the next big thing. But when you actually look closely at it, it can't actually draw, its writing is completely incorrect, it apparently commits tax fraud, and it only survives because a massive corporate banana company subsidizes its leaf supply just to make it look successful. It doesn't actually produce its own value, it's just hype.
Which brings us to our final point, and a question I really want to leave you with today. Whenever you see the next big, hyped-up trend promising effortless wealth, I want you to look in the mirror and ask yourself, are you buying bananas to eat or just to sell? Check your motivations before you fall for the hype. Thanks so much for joining me on this explainer, and I will catch you next time.